excited to bring you a panel discussion on the Serial Entrepreneur's Compass. Why exit, to whom, and how? Please give a warm welcome to our panelists on the stage.
All right. So let's start off this next session. This session that we're going to be talking about the Serial Entrepreneur's Compass, why exit, to whom, and how. So let me quickly introduce myself first. My name is Mameaw. I'm a venture capital, a partner of 500 Techsauce and Orzon Ventures. We are one of the most active VCs in Thailand and Southeast Asia. For 3 funds combined, we have invested more than 100 companies. And of course, exit has been a big topic for us, VCs and also founders as well. So we have our honor panelists today, Khun Paul and Khun Thai. I'll let each of you introduce yourself and how about your business, and then what have you done in your career that maybe lead to your experience that you can share in this panel. Yeah, maybe start with Khun Thai.
I was hoping that you start with him.
Yeah,
first.
from the furthest first.
Okay. So probably the easiest way for me to do is to really show my journey. So please share the picture. So I kind of developed this kind of diagram, if I can say it, to show the evolutions of my career through different stages. Obviously, before 1994, I worked for, after graduate from school in 1985, I worked for AT&T Bell Labs. I don't know if many of you heard of them, one of the premier research company. But then 1994, the turning point was the U.S. established diplomatic relationship with Vietnam. And at the time that I decided that I'm going to do something that helped the engineer in Vietnam, because I have a strong belief that there's a lot of smart, talented in Vietnam, and they don't have the opportunity to do the work. So I went back to Vietnam 1994 to start Paragon Solution Vietnam, and that's really the first software outsourcing in Vietnam, and that pretty much kind of set up the software industry for Vietnam. And then I sold the company, take a few years off, and then I decided that, okay, I want to see how it feels to work for a large company during the internet age. So I joined Amazon in 2005, which is at the beginning of AWS. I remember I'm still one of the first 200 employees there. So I worked there for a few years, and then I got called back by my venture capital to come out and run a number of companies. So that's a period of 2007 to 2017, working with a lot of startups with my venture capital. And then I got called from Microsoft to be virtual CTO to help a lot of large corporations go through their digital transformation. The Fortune 50 company. So I did that for a few years, and then one of my friends, who is the CTO for the largest hedge funds in the U.S., Point72, Steve Cohen, if any one of you know, and they want to build a new data platform, a part of their transformation. So they asked me to come out and helping them. So I left Microsoft to do that. And then I got, after I finished that project, then I got the opportunity obviously some of the investors had heard about what I did in Vietnam, and essentially they called me up and they asked, you want to do Paragon Solution 2.0? I said, okay, that sounds very interesting. So that's what Bangkok Silicon is Bangkok based, and Vietnam Silicon is in Vietnam. And I choose the name Silicon for a reason. I want to bring back the spirit of innovation, the spirit of entrepreneur that I reflect in the name. So that's kind of my story.
All right, thank you so much for sharing your journey. Khun Paul, please.
Yeah, just so today I run aCommerce. So we are an e-commerce enabler and solutions provider, as well as also a platform. So we are in 5 countries across Southeast Asia, 800 staff, and roughly around 350 million US, this year. So that's the business I run to date. But prior to aCommerce, exited about 3 companies. So first one was really in the media space, where we were doing Microsoft or MSN and Yahoo. It was a media business. We built that up and we sold that. Then we basically launched an agency and an advertising network. We built that business up as well, about 5-6 years, and then we were acquired by an Indian ad network company. And after that, then we started basically a company called Insogo, which was a daily deals. And that was a very fast exit, probably the best exit we've ever. We were very lucky, to be honest, on that exit. Built it up for 2 years, expanded to 3 countries, and then we sold that company to a company out of the US called Living Social as they expanded. After we exited, the 3 companies set up a company called Ardent Capital to invest really into early stage e-commerce transaction-based type of startups. And so from after the exits, we started putting the money also into investing into a startup ecosystem where, we did have a few exits in that, but really that's the journey. One of the companies that we did build, which is aCommerce that I'm running to date, is the largest. We tried to IPO about 2 years ago, but based on the market conditions, we pulled out of that. Currently we're profitable now, but that is really the journey, I would say, probably in the last 15 years, very quickly. Yeah.
Yeah, obviously, both of you have extensive experience in founding and exiting the company. So maybe I would like to, ask both of you first, as a serial entrepreneur, are you comfortable with starting something new, and what's your inspiration of starting a business? Because when you start something new, it's not the easiest thing, right? To get from the 0 to 1. What went through your head? What does it require for you to start a new business?
Well, let you start first.
Sure. I mean, I think when you see entrepreneurs, right, they're the types that walk down the street or even in a conference, and they start to already think about business models, how they would do things better, business opportunities. So I think naturally you always have this inventor's kind of mindset, except rather than inventing a product, you're actually thinking about business and business models, right? So I think you kind of have that natural, almost instinct to love to build. And then you start to mix that when you start to, after your first, let's say, startup or your first exit, right? You start to build a network of actually other potential founders and other partners that want to kind of do it again with you, right? And so, one part is you have this, obviously ambition in some ways, but the other part of it is that you're also fueled by other partners and other co-founders that actually either want to do it again, or they're new co-founders that they just want to, build a new model with you, right? And so, from that perspective, I think that, it becomes exciting that, you're riding a new trend after an exit, right? We very much we see trends, whether it's 5 to 10 years, and naturally there'll be new models that pop up. And when you add new business models, interesting co-founders, obviously startup capital, it makes it very appealing to actually start. I mean, for some, they might look at it as it's hard, but for some entrepreneurs, they might look at it as like an opportunity cost, right? Like if I don't start that, someone will start it, and it could be something big, right? But you start off obviously with ambition, but over time, for some companies, it'll take us 7 years to exit, but for some, it took us like a year and a half, right, to actually sell, right? It depends really on the business model, the market conditions, and really the timing.
Yeah. Obviously, like it's in you, the excitement of spotting up opportunity and start a new business. What about you, Kun Thai?
Yeah, mine is very simple. I have two principles, two characteristics that I felt that's always guiding me when I want to start something. First, you have to have a strong curiosity and desire to solve a problem or to improve someone's life. And second, you also have a strong desire for execution. Because to me, having the idea, having the dream would go nowhere if you don't have a good execution. So that's very simple for me.
Yeah, and if you want to become a serial entrepreneur, you cannot like really do like 10 things at once. So you have to exit some of your ventures, right? So let's move on to talk about the exit, because that's a really topic of today. How do you see an exit opportunity in Thailand or like in Southeast Asia in general, like versus the more developed, like or more mature ecosystems, like in the US or like in the other side of the world? Like what's your view on it? And also like I maybe would like to talk about the different type of exit, but we can talk about that later. Yeah.
I can start on that. So I have gone through several exits, both not in Asia, but mainly in the US. Like you said, Mameaw, there's definitely a difference in the ecosystem for the exits. Obviously, with the US, much more mature, liquidity are there, the opportunity for the founder and the shareholder to exit out with potential financial gain. However, I think the opportunity in Asia with the exits, even though you could go through strategic buyout or the acquisition, thing like that. But I think with all the change in the technology and things like that, I think the exit opportunity for startup company is really massive in Asia, in my opinion.
Yeah. Any thoughts, Paul?
Yeah, the exits that that I see, like in terms of the largest opportunities, and most of the exits that whether it's our portfolio or my own, our own exits in our own company, is really international companies wanting to enter Southeast Asia. I feel that selling to local companies will not really tend to maximize your returns, because their mindset in a way is that if you're local, if they're a local conglomerate or a local enterprise, they feel like they can build it themselves. They know like the local Thai culture or Vietnam or Indonesia, and so usually that type of exit is not really going to, we feel, be as lucrative as where we look at an international company. So we've exited to an Indian, a company, Japanese, American, and really what they're looking at is entering Southeast Asia in a specific industry, in a specific model, and they're buying the team, right? They're buying the local expertise. And really, when you see that, meaning that you are valuable to global companies or multinational companies wanting to enter, that becomes really synergistic. That's something that they want and that they need. And many times we think that, hey, when they buy us, we get to also expand, right? When you work for them, you get experience in the other markets that they're in. So, Indian company buys you, you get to go to India with Southeast Asia, and you transfer the learnings, or even Japan. But what I found interesting was that we always thought the company that would buy us had better tech, had better process workflows, better systems, right?
That's interesting.
Yeah, we always thought that they did, and that's why we're like, oh, we want better tech. But majority of the time, it was not better tech. They were just in a better market, right? With much better economics, right? And for us, we were building in a very difficult market. But so for them, buying us was allowing them to immediately grab a market that enabled them to actually trade up, whether they were a public company or they were also raising money. Grabbing Southeast Asia was actually really valuable for their own valuations. But we learned also that we actually were building pretty good teams and pretty good technology that they were actually would use in another country. And so that's where we kind of learned that it wasn't just about market expansion and synergy, but actually for some of them, they want to buy modules or components of your tech that they wanted to add to their global platform.
Right, that's really interesting to hear, like the keyword synergy, and then build the technology that someone would want to utilize your technology to come into Thailand or so. Yeah, so apart from like M&A activities going on in Thailand, Southeast Asia, what do you think about like IPO market here or and other exit options? Because like Paul, you have looked at IPO option as an exit before, right? And with the market difficulty, is it still possible for startups to aim to exit via IPO?
I mean, I think that the IPO market right now is really bad in Thailand. I mean, the question you have is that, have we hit bottom? Is that recovering, right? I think it's still, at the bottom. I mean, we were just having this conversation earlier about, what is the timing of the market. But even when the market, the timing of the Thai market, what are the challenges that we see here? There are other markets that immediately you start to look at, right? So, for ACOM, we're in 5 countries. So naturally, is Singapore, SGX, a potential market, right? But of course, that's something that, you have to get alignment with all your investors. The other market, Indonesia, IDX, it was once a good market, but now very challenging as well. So it's not just the Thailand market, it's really like Indonesia, Singapore market is tough. But the interesting one, I think, is also like the Hong Kong market, right? But the challenge you have is, are you in China? Are you in Hong Kong? Do the investors in China or Hong Kong really understand Southeast Asia, that you're able to convince them in terms of value and growth and etc. So we're looking at opportunities in all the other markets, but right now the conditions is still pretty tough, and we're not big enough. So you have to be 1 billion, 2 billion to be looking at even a U.S. market, right? So if you're looking at a U.S. market at 1 billion or 2 billion, and let's call it you're only 350 million, right? You have to start to think, right? Like, is there a consolidation play? Is there mergers that other companies it can merge with to roll up that can actually think about listing in the other markets? So those are things that I think as you wait for the market to recover in Thailand, right? It's almost like it's your fiduciary duty, as a founder, to look at all the other options out there while you wait for the market to recover.
Yeah, so there are things that you can be taking right now and then look at other opportunities. What about Khun Thai? Do you have any?
Yeah, so admittedly, I'm not too familiar with the IPO market in Southeast Asia. I'm more with the US. But the thing is that when I'm thinking about IPO, I look at from the different angle. IPO is really mean how my employee can participate in the benefit of the company. I mean, it's not just a founder or the key shareholder. So So if we cannot do IPO in the normal market, we still have to figure out a way that we can have the employee share with the growth of the company, share with the
Yes,
success of the
exactly.
company.
Yes.
And that to me is quote unquote IPO.
All right. And I'm asking you guys on behalf of the founders here, when you are building a business, you get to the point. At which point do you think it's suitable for thinking about the exit? There must be one point, right? Like, hey, should we build a business to exit from the start? Or like, hey, you are building for your passion, something else, and then is there any point that you think, hey, this is a good timing for exit? Maybe we can start with Khun Thai.
Yeah, so this is one of the piece of advice for entrepreneur. I went through many startups, and one of the things I always tell the founder, when you start a company, actually what you need to think is you need to have exit in mind first. What do you plan? What do you want your vision of this company going to be? And that exit could also relate to what you think is, what kind of legacy that you want to have by building this company. You want to be the biggest e-commerce in this region. You want to build up the IT sector for a country. That's what we did in Vietnam. That's what we try to do it here. So to me, you have that in mind, but obviously the exit, one of the things we want to make sure that the exit won't change the identity of the company, and also won't stop the innovation, the thing that we have been making successfully. Because when you thinking about, let's say you exit under the IPO, you got a lot more constraint. You got to meet the financial obligation. You under the a lot of more public scrutiny, and your innovation start to be hindered. So whatever exit strategies, you just want to make sure that won't stop your innovation, because that help you start the company.
All right, Khun Paul.
Yeah, and for exits, right, it's usually, my experience at least, is that if you raise capital and you have investors and your cap table, whether it's with strategic investors, it's financial investors, that topic will come up, right? But usually where a lot of, I think, startups, the first experience that they will face in thinking about an exit is they are being approached by either a competitor, a conglomerate, right? Where they are interested in basically buying your business or investing in your business. And so from that perspective, the moment a big strategic investor says, I want to buy 20% of your business, right from that point, you're already forced to think about what is the long-term exit, right? Because if you take a strategic investor like that in, you cannot now sell to another strategic investor. So you have to almost think very long-term that most likely path is probably going to be a potential IPO, or maybe that strategic investor starts to get more and more equity, whether it's 20 to 40 to 51, right? So really, there's many different kind of opportunities that arise. If you're a founder here, it's your other founders that are tired, and they're like, we've been running this business for 5 to 6 years. Like, can we explore an exit? Maybe it's so competitive. Like, we should explore selling to a potential competitor. So some of that will start even from your founder base, from your investors, but even from your clients. As you look at selling partners that you partner up with, because naturally as a founder, CEO, you're like a sales guy, right? So you're selling to everybody, but the moment they look at your business like, wow, that's we're using you for a lot of your services. Can we be a strategic investor, right? So those are kind of things that start to really come up. The moment you start to raise capital, you already start to have to think about all the potential exit scenarios out there.
Yeah, so given your experience of like founding many companies and exits, what are the most important lessons you learned about building and scaling a business that would give you a great foundation for a good exit later? Yeah, maybe start with Khun Thai.
So to me, when I look at a very good question, and to me, I look at that from two different angles. The first angle is how do I build and scale the company, and obviously a number of different factors that I have to make sure that I pay attention to. One is I have a good strategy. What is this business going to be doing? What my strategy? What my vision? Secondly, I think the most important asset of the company is people. If you don't have good people, you cannot get it done. And the third is really you have to have particularly with technology, you have to have a good process. Okay, so those are the three components that I feel important to build a good company. But the other aspect of having a good company is leadership. And I follow the model of leadership is a servant. You're not a dictator, you're not a manager, but you provide clear guidance, clear vision to your employee, and you provide support to your employee to get them to do their job well. And then you also need to have your top management to also be strong. So I think with those two areas, if we can do it well, I think the company will be successful.
Yeah, I totally agree with like the founders that I like to invest in are the ones that can make like tough decisions and like get the company through the hardest time. What about Khun Paul? Do you have any important lessons do you want to share?
Yeah, I mean, no, there are definitely a lot of lessons, but maybe just limited time, right? I do agree that it's definitely the team, right? The founding team is part, but actually the next level down, are you able to build really a strong, supportive management team that is scalable, from a buyer's perspective? But when you look at even the process, the companies that actually get bought are the ones that don't want to sell. So imagine when you go out and you try to sell, you don't look as appealing to actually the buyer, right? What makes it appealing is when your vision for the market, the industry, you're going to build a business, you're going to drive an IPO to an IPO. That is where the buyers start to actually come in, right? Because the way they will look at it is, if I don't buy you now, you're going to be a competitor. So I actually would prefer you to be on our side, right? And so that's the kind of mentality that you have to, in some ways, have when you're going out there and presenting to investors, right? Or potential strategic partners, that the vision is clear, the team that you built, right? And that's what really attracts like the M&A. With that said, a lot of the, I would say, successful exits that I see, right, are the ones that are actually very early. So even in your Series A round, right, that is where, especially the strategics around Asia, they look at that as, now is the time to buy. It's cheap. You haven't raised your A round yet, because the moment you raised your A round, right, the return on investment that VCs expect on that capital is probably another 4 or 5 year horizon with 2 to 3x minimum, right? And so therefore, when you're raising your A round, you actually attract buyers. And the irony of it is, you don't want to sell. You just started your company. You just want to raise your A round and continue to build. But that is actually where there's a few times where we turn down acquisition attempts at the A round, but when you add up the return that the founders got, meaning if I sold in the A round, I would have made more money than waiting 3 to 4 years later and trying to sell after a B round. So a lot of the advice I'm giving, like, our portfolio companies or startup founders is when you get that like acquisition interest from early on, explore it, really consider it, right? Because the moment that you raise the A round, you're not anticipating changes in market conditions, crazy competition, but don't even forget that the company that's trying to acquire you will now buy your competitor and compete head on with you, right? So, but again, it's the best time to sell is when the one time that you actually don't want to sell, which is a really kind of weird dynamic, right? But that is, I'd say, with the many years, of building and exiting, I've learned that, interestingly, the A round I would have gotten much better returns from a personal perspective.
Yeah, totally agree. As a VC, I've seen that if I exited this company during like A or B, I would have made like so much more returns. Since we are running out of time, but like I would like you to maybe give a very, very quick, short piece of advice to the audience today, maybe the founders or any companies looking to acquire a startup, maybe just one simple sentence. What's your key learning or like maybe advice that you want to speak today?
So very simple. I saw the presentation from the previous speaker, and I thought that the term that he used is very correct. Let's get started. Let's start thinking about what you want this company or what you want to do. So
let's get started. What about Paul?
Yeah, I mean, since the topic here is about exits, right? So if you guys want to basically try to sell your business, my recommendation is, right off the bat, you actually explore the strategic partners, the large companies. You got to be careful also, but the discussions that you have with them is basically around synergies and a partnership model, right? The moment you start that conversation with, yes, conglomerate, you have a very weak AI department, we want to be your AI partner. Outsource to us, and we will form a strategic, synergistic, et cetera, partnership with you. The moment you start that discussion, they will start to actually inquire onto, are you for sale? So you don't have to go out and actually say you're for sale. You can actually go out and start to explore from a commercial perspective. It's a commercial partnership, but usually a strong commercial partnership will naturally lead to, a potential exit. And so I think my recommendation for you guys is that, number one, the worst case scenario is you get a really strong, sales commercial partner, but it also opens up opportunities in discussions for a potential exit. That's my advice. The second one is when they say I'm interested in a 20%, a 51%, a 40% stake, do not shrug that off. Spend time to really understand, right, what do they mean by that? Because sometimes it's also a test. They will look at you like, are you really interested if I just invest and get 20% of your company? And if you are open to that, they might actually take even more than that. But for some, it's a test to see how open you are and how strategic you are in dealing with a request like that, right? It's almost a test. So those are my word of advice, which is you don't have to answer right away to them. Just say, hey, look, let me spend some time. I appreciate it, but let me take that back and spend some time to think about it with my co-founders. And that is my word of advice to you guys is that really think about not saying no, but have a thought, think about it before replying anything back.
All right, thank you so much for a super great piece of advice from Paul and Thai. Please give a round of applause to the panelists. Thank you.
Thank you.
Thank you very much.